Right, so for the sake of the video, good afternoon. This is the Wall Street Close uh, Market Watch List Thursday. So we're just talking about oil prices sliding here, and markets are nervous that these high prices might keep interest rates higher for longer as central banks fight high inflation expectations. Right, so let's look into rates. And we'll go to the 3-day cycle. Let me know what you want me to look at, guys. If there's anything in particular you want me to look at. So Thursday, we essentially capitulated here on the 10-year yield, breaking below yesterday's closing price. And we've got this sort of head and shoulders in place with prospects of a downside continuation, which is probably a bearish factor for the US dollar. It too broke structure. And it is on the front side of the bearish correction. And we have Monday, Tuesday, Wednesday, Thursday breaking down many days of consecutive longs. So starting Wednesday, Thursday, Friday, consolidation, breakup. So essentially what we're doing here is we're coming into all of that length. And we've got last week's range as a target for the day ahead. And we are now into month and quarter end. Are we going to rebalance the books and come into that? Probably, or possibly, I should say possibly, rather than probably. Probably's leaning too biased to the downside, and we never know what's going to happen. So we just want to be prepared for what might happen. Right, so just making sure I'm sharing my screen still. Great. So at the start of the day, we were talking about how the markets do one of three things: breakout, pullback, continue, breakout, pullback, fail. So we broke out, we've pulled back, and because we've broken structure and we are breaking below the opening price, closing below the opening price, potentially closing below yesterday's lows, this could be classed as a failed breakout. So the bias is to the downside. Okay, so we're technically biased on the US dollar. Right? Okay, so impulse, correction, prospects of a downside continuation. And what I can do here is measure that correction, that move up. So the top of the correction to the bottom. And I like to do that because for whatever reason it tends to work. That the price likes to come in to this target zone, and I'm going to pull it left, and you'll see that it marries up. What a coincidence. It marries up pretty nicely, if not to the T, with that breakout area. You see that? So where the origin of the move came from. So we came up, down, choppy, 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 up, down. It actually that was a breakout of those lows. Anyway, so this is a target area for the day ahead in the US dollar. It's not to say that it's going to happen, but we're just preparing for what tends to repeat itself. We see this happen over and over again on various time frames. The nature of the market is fractal, and these are the types of chart patterns that we look out for. So impulse correction, downside continuation into the minus 27 and the minus 61.8. All right, that is a target area for the dollar for the day ahead. So that is old support, which now turns resistance as a broken structural point. So we've broken, we've come up, right? Breakout, pullback, continuation. Okay. So that should leave us bullish across the board, really, for the day ahead in terms of the euro, the commodity currencies such as Australian dollar, for stocks, for oil, and bearish on dollar CAD, bullish for the CAD. So those are sort of the main pairs that we tend to look at. Now we've got this dollar yen that came in close to the 150 psychological level, and that too is starting to look as though it wants to capitulate to the downside. Or, on the other hand, maybe it's a correction before the next move up. Anyway, we're not here to guess what's going to happen. Can't get rid of that. But if we are bearish on the dollar, you'd expect this to continue to slide. So we're bearish technically, but fundamentally, the market is in anticipation of a more hawkish Fed in comparison to its counterparts such as the Bank of Japan, Australia, Bank of England, the European Central Bank, etc. But considering how high up the dollar has been for so long, it's not surprising that we're getting a pullback, potentially. So that's the weekly chart. Let me give you, so all of that, these are bullish bars, weekly chart, and I'm just going to clean it all up so we can see it properly. Right, so we've popped up to say hello to this potential resistance area. Okay. And maybe we're failing and heading lower. And perhaps we're going to start seeing bearish weeks unfold. Who knows? Maybe not. But at the moment, that looks to be the bias on the daily chart, at least. So what we can do is measure the rally, the bottom of the rally to the top, and note that we've come in pretty hard into the Fibonacci scale, and the key Fibonacci's for me are up within here as potential support. So a correction with such momentum, you'd expect it to continue. You'd expect it to continue correcting, not necessarily on the day. I mean, we could move up tomorrow, Friday, to drop a bit further. All right, so that's my outlook technically on the US dollar. Not sure what's on the calendar. We can have a quick look at the FX Street calendar. FX Street economic calendar. Here is some information from my colleague Matthias talking about the Asian session, Tokyo CPI, unemployment rates, etc., etc. Got UK GDP, Germany will release retail sales and unemployment rates, and we got Eurozone CPI, and then the focus will shift to the core personal consumption and Canada's monthly GDP. So we've still got some data points for the day ahead that we need to pay attention to, or at least be of note that there are red calendar events on the calendar, and you might not want to be positioned too heavily into those and looking for setups after the events. Okay, right then. So another busy day ahead by the looks of things. Um, Another thing to note: those that have been following me for a while now, I like to use. Um, I like to look at the market, the day count. So where are we in the week? So Friday. So just taking cable here. I'm just going to clean up the chart, take off the levels. Um, so on Monday, Monday. Um, that's the initial balance. We dropped once, twice, and we've kind of got a third push into the low, and we rallied. So on a Friday, what I prefer to have seen in this pair would have been for a continuation to the downside, and then for Friday to be the capitulation to move up. But we got that on Thursday instead. But that's fine. All right. But we can look for pairs that are giving us prospects of such a setup, um, so that Friday could give us a potential move in the other direction. Now, the euro here, the euro, right, has come up to say hello to the highs of Wednesday, dropped. Are we going to get a bullish continuation? Perhaps. Perhaps. So maybe Friday is going to be a continuation day across these pairs rather than um, being the start of the move. Perhaps we've already seen the move, the start of the move, and perhaps we're going to get pullbacks for the continuation on Friday. So I'm just going to look at what you're asking me here. Euro yen. So euro yen pullback, prospects of a bullish continuation. So we've broken structure. Markets break out, they pull back, they either continue or they fail or they go into a trading range. Right, we're at the end of the month, end of the quarter. Perhaps we're going to get some rebalancing. And what does that mean? Where has this come from over this month? Let's have a look. Well, we're pretty sideways. So we've got business above last week's highs, right? So there's volume up here. There are in the money shorts from the top of the prior month's range. So perhaps we're coming up towards that. On the other hand, we've got space below the latter part of this month and last week's lows. So we've already shown that we've broken last week's low. And and what we're seeing here is a break of yesterday's high. That is technically a failed breakout. So my bias, considering that we've swept the liquidity below these lows, because you would have had stops below here, so we've moved into those. My bias is that we're probably coming up into the in the money longs and stops up here, right? So that could be the play for Friday, perhaps. So you've got an impulse, correction, continuation, perhaps. So we'll have to wait and see. So that's why we like to use. It's a real plus that we trade in the US session. If I don't know if you all trade in the US session, but it's a great session to trade because you've got the benefit of, well, I mean, today's US session, which is this move, tonight for me, which would be Asia and London, setting us up for the New York session. So you've got three sessions: Asia, London, or you can include the US today, Asia, London, and then you've got all of sort of footprints of the market. So that's what we're looking for. We're looking to see what Asia and London give us tonight, and perhaps it's building up to give us conviction on our bullish outlook. Okay. And I've also been asked about the Australian dollar. Right. So Australian dollar, where are we in terms of where we've been? So we're right at the bottom of last month's range. All right. So we've come down. So what do markets do? They dump and they pump, or they what do? They pump or they dump. So this is part of a larger template. So we've come all the way down. So we've dumped accumulation, and perhaps we're going to be looking for the move up. And if that's the case, then we can note that we've taken out stops, broken below these lows, right over here, and we've taken the stops out, right? So you've got breakout traders. You've got breakout traders that higher time frame traders that were in anticipation of a move lower. So we've put the squeeze on. Okay, so we've picked up liquidity, and perhaps if we're coming up within last month's range, right, up into these highs, so perhaps we're going to build up towards last week's highs, putting a squeeze on, considering that we've broken structure, we've broken that downtrend, right, we've broken that downtrend. So we're now in a bullish market. Oh, I'll change that green, sorry. Okay, we've broken these lower highs over here. Okay, so we've broken those. Turn that green for support. Right, we're on the front side of the bullish correction. So we've got a solid dynamic trend line, bullish trend line. So we're in a rising market. That's not to say that we can't come down. Of course we can, but it seems as though we want to continue going higher. Now we're testing resistance. Okay. Everybody following? So up, down. So we haven't broken this structure yet, but perhaps we can have a pop at it. For me, however, that's not really a deep enough correction. I like to see at least a 38.2. Not far off, but perhaps we're not going to quite head higher yet. Perhaps we're going to attempt to head higher and start building prospects of a move higher. Okie dokie. So, any stories from today? Any trades taken? I personally wasn't involved, although I did see some healthy looking setups. I just had a preference not to trade today. So I can't share any real trades, but I mean, there was a gold setup that I was glancing at, not particularly enthusiastic about trading today. I had a very late night last night. Wasn't feeling 100%. Was playing in a five-a-side football tournament late at night. We lost by a couple of goals to the leading team. Very frustrating. But and that's besides the point. But on gold, where were we? Over here was just while I'm waiting to hear what other people have been up to. We had this opportunity in gold. It was stuffed below the yesterday's close, and it was around about 9:30. Let's put this onto the 5-minute chart. Don't know if this is of interest to anyone, but we were talking about setups. Someone asked, what is a setup? So this was a nice example of what a setup was. So in the, bear with me, that was the news. And we've started coming into Wall Street. So we got the pump up. I'm going to go into the 1-minute chart now. It's easier to identify. We had the pump up in the Wall Street Open, right? We had already had this high peak formation. So we're ticking things as we go along. And in fact, let me put the sessions indicator on. Right. So New York came along. We had the data out that gave us a trade, a first bounce trade. It was a big death bar here. So that was the confirmation and a drop. So that would have been one trade if you wanted to trade the news after the news. So you've got an M formation at the top and a strong bar to the downside, lots of momentum, breaking structure. You've got this slight pullback. I like to wait to see if we get a pullback and an engulfment, and then I take that and ride it for a quick in and out trade, or leave some on. You know, maybe that will just keep blowing off, but wasn't to be. And then in the Wall Street Open, so we were looking for the pump. And remember, we're already technically in a broken down market because this was a change of character as identified as from this indicator. So we broke structure, right? So the lows of the US session. All right. So technically, this is a broken down market. So you can expect any pullback to be met with resistance, right? So markets do one of two things: they break out, they pull back, and they either fail and run up high, or they continue to the downside. So coming into the Wall Street Open, we got the pump up from support, but we are technically in a broken down market. And this could have quite easily gone up, but the fact that it didn't, I mean, that's the point. The fact that it put in another high, so you've got another peak formation high here. So peak formations are up. So your bias is to the downside. And you're thinking now, well, maybe this is going to now break this structure. But because it hasn't broken structure yet over here, where's my level? So it didn't break these lows, right? That move there did not break those. So you can't expect it. Well, I mean, you might anticipate it, but you've got to be cautious. So your target would be down here, or at least you'll be taking a significant amount of money off the table, maybe at break even at that point. So that was the trade anyway. So that's the setup. So we're back below yesterday's closing price. You've got peak formations up and we're moving lower. So that candle there would have been my entry. Stop above the stop above the probably a little bit higher up just to be on the cautious side of things. Well, what I'm looking for, in fact, is asymmetrical risk to reward, right? So I'm looking for a 2 for 1, at least a 2 for 1, a quick in and out. All right, so gauging how price behaves when you're in the trade, bang, that's a really nice confirmation candle. You can add some on here, or you can just say, do you know what? I'm not sure about this because we're coming into support. Um, I've been duped many a time on such a candle, in fact. So I might just want to take some money off, reduce my risk, get paid for my analysis and so forth. Right, starting to pull back, looking for another confirmation candle. Oh, okay, great, got some confirmation. I'm going to add some on here, and off you go, and nice trade. And then later in the day, we had another move up, but because we've broken structure now, if we get another setup, so we've broken this structure now on that drop, so now we're clearing the way for an even bigger move to the downside. Peak formations are up. We're coming up into the origin of that displacement. So markets do one of two things. They break out, they pull back, they either fail and carry on, they can go sideways, or in this scenario, they continue and trend. Right, so that would have been another trade. Getting in wherever you want to get in. There's the information pullback, and then you've got the excuse me. You've got the let's see now. You've got this candle here, which broke structure, engulfed that pin. That can be your entry there for another trade to the downside. Okay, so wow, Zeb, you are killing it. Up 55%. Fantastic. Another look. I'd love to do like uh, a project here. Those that have some success stories, and whether you're using the signals that we provide you, or the technical analysis that we give you, the recommendations that I give you in the US session, whatever it might be, or if you're simply using your own strategies, but finding conviction with our support. It'd be wonderful to do an interview with you, Zeb, or anyone else that fancies getting involved in front of a camera. It'd be really interesting to hear your trading stories, your journey, seeing examples of how you trade, your strategy. I don't know if you'd be up for that, Zeb, but I certainly would be up for interviewing you. So, congratulations. That's fantastic news. Okay. So, listen, it's Friday tomorrow. Um, be careful out there. You don't want to come out of the week on tilt. Okay. So, Zeb, you've had a really good week by the sound of things. Do not start getting cocky and too confident and start risking more and trading outside of your plan or your rules, because it happens, and it happens to all of us. It's a game of psychology at that point. And just so anyway, Fridays, just trade your best. So you go into the weekend nice and happy, content, and you can just relax with your family and friends, and shake yourself down, get ready for Monday. So on that note, um, your strategy is something I would disagree with. Well, not if you're making 55%. Um, so I was about to wrap up. Okay. Well, look, whatever works for you is fantastic. Um, you don't use stops. Okay. You're right. I wouldn't agree with that. But hey, if it works for you, it works for you. But again, be careful with that. You must be right a hell of a lot of the time. Um, right, so I think we're done here, guys. Wrapping up and looking forward to a strong finish for the week. Okay, Zeb. Well, feel free to share your the way that you trade. Um, but we'll wrap it up here, and perhaps you can share it in a different chat room. And I wish you all the best for the day ahead, and I will see you for the US Open. What is support for gold? I'm being asked. Support for gold. Uh, let's have a look. Pretty sure I gave support for gold earlier on to someone. Yes, I'm sure of it. Let me dig it up. Uh, where was it? Okay. Here we go. I think there's a video I did. I'm pretty sure of it. Bear with me. Here we go. So I'm just going to pop that into the chat for you. Um, but there it is. No, let me. So you've got all of those there. So if you want to take a screenshot, perhaps I'll just pause the video there while I put it into the chat box so you can watch the video. Right, there it is there. Okay, guys. So all the best. See you tomorrow.